In this video, I want to talk about TPL, Texas Pacific Land. They just reported earnings and you have some good, positive news when it comes to the company and the stock. And as the company just reported earnings, the stock is up 10% because a few bullish points just emerged. So, what will you do in this video? What will you watch in this video? First, I want to mention this earnings report. We will skim through it and I will add some comments along the way so you will have a clear analysis on what is happening with the business model. Also, I have a few bullet points that I want to share with you with some insights about the business model. And also, I just listened to the earnings call and they mentioned data centers that are coming to Texas. So pretty bullish. I have a couple of quotes for you for the earnings call, and we'll talk about the valuation. We'll talk about what is happening so you really understand what is happening for the third quarter 2025 for Texas Pacific Land. Okay, so we can start with the earnings report first. In case this is your first video from this channel, welcome. My name is Christophe Noor. I'm French. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year thanks to TPL. I first bought TPL in 2020 and I multiplied my investment by 8. It's a 8-bagger for me. And I bought in late 2020 and I sold at the absolute top in November 2024 because of valuation concerns. And since then, the stock has gone down and down and down and down. The valuation has gone down and down and down. So I am getting interested again, okay? We'll talk about the valuation later. So I'm still following the company. I know the company quite well, and I think it's the best inflation hedge ever. If we live in a world with inflation, TPL is my go-to investment. It's my best inflation hedge actually, and I love it because you will see on this report how resilient this business model is. Okay. Let me add some context to this report so you understand very clearly. In the second quarter of 2025, so 3 months ago, oil prices went down. Oil prices went down. And how is TPL making money? Well, TPL, Texas Pacific Land, they own lands, 900,000 acres of lands in Texas. And if somebody wants to drill oil, like Chevron or ConocoPhillips or ExxonMobil, you ask TPL, can I drill oil? TPL says, okay, but you give me a royalty. Okay, fair enough. And the more revenue these oil majors make, the more royalties TPL make. So it's an asset-light business model, sky-high margins, and if the price of oil is up, TPL makes more royalty revenues. So better revenue, better margins, better efficiency, etc., etc. What is happening right now? If you look at the price of oil, it is going down, okay? If you look at on a monthly basis, since COVID here, the price of oil went up until 2022, and then it is trending down. The price of oil is down. So maybe you can expect deceleration or a decrease in revenue from TPL, right? Not at all. TPL is still operating in full force. This is the revenue of TPL over time on a quarterly basis. Each blue candle is a quarterly figure for their revenue. And now, this quarter, we just reached $200 million in revenue for TPL, the highest revenue line ever. At the same time, oil prices are low. What does it tell you? It tells you how resilient this business model is, okay? So how is TPL generating record high revenues when oil prices are low? This is a very good question. Well, you have two ways of improving revenue for TPL. Either oil prices are high or the volumes are high. If you drill more, as Trump would say, drill, baby, drill. So even though the prices are low for oil and all the commodities, by the way, you drill more. Oil majors are drilling more. You have more production, more volume. So that perfectly offsets this. If you look at the report, you will look at, let me spoil you the fun a little bit. a few comments from the CEO. Despite the ongoing weakness with broader commodity prices, we have leveraged our considerable competitive advantages to achieve record performance across nearly every major key performance indicator. You have a record high production. If you scroll down this report, you will see the volume for oil, the volume for water. If you look at the volume for oil, this is this company's share of production volumes, right? Oil, this is much higher. You can look at the 9 months or 3 months. The reporting of TPL is quite bad actually, because you don't have a comparison year on year. You have a comparison quarter over quarter. This is bad, but this is not the only qualitative problem you have with TPL, by the way. Anyway, if you look at the 9 months performance, you have more volumes for oil, from 3,000 to 3,600. You have more volumes for natural gas. You have more volume for everything, actually, despite prices that were quite stable for oil. Oil is the most important commodity for TPL, right? Okay, so yeah, despite a weak environment, record revenues, record net income. You can look at the net income here for the 9 months ended for land and resource management, so oil. If you compare the net income here, $252 million. You compare to last year, $230 million. So net income from the oil segment is going up. Net income for the water segment is going up. So the consolidated amount is going up. You have a business that is perfectly fine despite a weak environment. That shows how resilient this business model is, because you can compare this earnings report to oil majors. Occidental Petroleum, Chevron, ConocoPhillips, ExxonMobil, everybody is struggling because oil prices are going down. TPL is the only company in the industry that is enjoying record high margins, record high free cash flow generation, net income that is pretty good, revenue all-time highs. This is fine, okay? So the business operations are fine. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. The second part of the analysis is what we have here, the capital allocation decisions. If you look at TPL and their history, this is a company that has never had any debt. They are enjoying a very nice fortress of cash. If you look at here, the cash balance is what is green, are the green candles. And the red candles are representing the debt. You don't have any red candles, which means the company never had debt. Well, for the first time in years, the company just issued $500 million of debt. Okay? And the management always wanted to make acquisitions. So instantly, they announced 2 acquisitions for a price of $500 million. So the company just announced that 2 weeks ago. It was like a press release 2 weeks ago. And now, right now, they are announcing 2 big acquisitions. They are acquiring more lands that are contiguous. Anyway, I don't like these acquisitions. I'm not a fan of acquisitions at all. I think the business model of TPL is so good that you don't need any debt. You don't need to make acquisitions. Just enjoy your royalty streams and that's it. So I don't like this. This is why I put this in red. But so be it. The management team of TPL has always been difficult to deal with. But the business model is so good, so resilient. I love this business. Okay. Also, second capital allocation decision, the management team just announced a 3-for-1 stock split. It is not the first stock split the company had. I believe they had one in 2024, a 3-for-1 stock split. So don't be scared if you see something with the 300, like a $300, $400 in the coming weeks. It's just a stock split, a 3-for-1. Also, I put this in green because that's a very good capital allocation decision. In July 2024, TPL began construction of a 10,000 barrel per day produced water desalination facility in Texas. Okay, so TPL is investing a little bit in themselves, in capex, and they want to make the environment safer, okay? And they've been working for years for this desalination facility. Apparently, it's good news. Apparently, it's working properly, and it will be very good for the industry overall because of fracking and because of more drilling in deeper underground. You need more and more water to drill oil. Okay, that's it for the report. I have a few notes I want to share with you, and then you will see what they said during the earnings call. Let me scroll down the report in case I am not forgetting anything. No. Water sales. Fair enough. Net income. You have record high free cash flow here. Free cash flow is just trending up. The business is completely fine. Now let me go to my notes. Okay. First of all, you have this. Yeah, my title is about data centers. I will talk about data centers later on this video. Don't worry. Record performance. The revenue is up at $200 million. You are up quarter over quarter. You are up like 17% year on year. The net income is up and to the right, plus 14%. Earnings per share are up plus 14%. The business is fine. The operation is fine. The operations are boring. The adjusted EBITDA margins are sky high, 85%. You have one of the highest margins you can have in the world. This is why I love TPL. You can have them in a bad environment, they will just thrive. Also, they have a water segment, and this segment is on fire. The water sales revenue is up 20% year on year. The produced water royalties are up 16% year on year. You have a water segment that is in high demand right now. Maybe you don't know this, but to drill oil, you need a lot of water. For 1 barrel of oil, you need 3 barrels of water. And as you go deeper in the ground, you need more water. So you have a ratio, a cut to oil ratio, 3:1, 4:1, 5:1. For some regions that are very dry, you need a lot of water. And TPL implemented a water segment in 2017, and this segment has been growing wonderfully 20% per year. Maybe the water segment is the future for TPL. And if you only want to benefit from this water trend, you can invest in Landbridge, which I am doing right now. Full disclosure, I am invested in Landbridge. This is in my portfolio. Landbridge is a company that is very similar to TPL. They own lands, it's a royalty company, but they don't have an oil operation. Okay, it's purely water. For example, for TPL, the majority of the revenues are in the oil segment. For Landbridge, you have 8% of the revenues that are linked to oil. So the majority of the revenues for Landbridge is water. If you want to benefit from this huge trend in water, you invest in Landbridge. Okay, this is what I'm doing. Next point on the list. You have a massive acquisition, yes, and the management expects a double-digit pre-tax cash flow yield at current prices. And they just announced a new debt. They just announced a 3-for-1 stock split expected in December, so in 1 month. And now I want to talk about the call, because you have a few quotes that are very bullish for TPL. First of all, the management is very confident. Despite low commodity prices today, TPL can tolerate periods of low prices for assets that will likely generate cash flows for many decades. Some bears, some people that are bearish TPL, think that TPL has resources for a few years and everything will get dried up in a few years. So how long can you drill oil? How far can you go in the future? Well, TPL has reserves for at least 40 years. So you can drill oil for at least 40 years until you discover more oil. So I believe the investment thesis is pretty safe for TPL. The Permian Basin is in full force, and the Permian Basin, this is what they have to say about it. The Permian was responsible for virtually all of the world's crude oil supply growth over the last decade. We believe long-term there is a very favorable skew toward oil price cycles. Now this gets interesting. We live in a world with inflation right now, right? Look at your grocery prices. And at the same time, oil prices are trending down. What if next year oil prices are going up from $60 a barrel to $70 a barrel to $80 a barrel? What if it happens? Nobody knows if this will happen. I don't know, you don't know, nobody knows. But history tells us this is a very cyclical industry, and the cyclicality has been in a downtrend for 3 years now. What if for some reasons the oil price is going up? If this is the case, TPL will print cash. As I told you before, now oil prices are low, but the revenues are high, are rising for TPL because of more volume, more drilling. If at the same time you have more drilling and at the same time you have higher oil prices, TPL can double their earnings. TPL can print cash, and the apparent high valuation will not be so expensive. Now if you look at the forward PE ratio for TPL, we are at what, 40? What if oil prices double? Let's say double because it's easy for our investment case. If oil prices double, the net income will double, and the forward PE ratio is not 40, it's 20. Okay, so that's the bull case, the bull scenario. It's very unlikely the price of oil doubles from here, but you never know. Okay, if it goes up by 20%, 30%, TPL is not that expensive actually. But at the moment, you have a forward PE ratio of 40. Anyway, let me continue. On the new desalination plant, what I've been saying about recycling water, etc., etc. Construction continues on our 10,000 barrel per day desalination facility in Texas. We expect to begin commissioning the facility by the end of the year. Our proprietary desalination technology and beneficial reuse efforts can play a critical role in providing a sustainable solution for Permian produced water. Sorry for my thick accent, guys. I have a broken accent, I know it. Don't put this in the comment section below. I know it very well. Okay, so they are working in full force to invest in CapEx, to invest in the new revenue line. And I believe now, because you will have this new operation, potentially in the next quarters, in the next years, you may have a new line of revenue for TPL, a new stream of revenue from recycling of water, desalination of water. Maybe this will be a new line of revenue, exactly like we have here: water sales, produced water royalties, easement and other surface related income. Maybe you will have a new line here in a couple of quarters for their new recycling of water, right? Maybe. This would be my guess. Now about data centers. You are probably aware, if you've been following the TPL story, that the data center story is in full force. Almost all of the data centers are in the US, in North Virginia, but you have a lot of backlog, you have a lot of demand in North Virginia. You have a lot of demand in this new AI world. Where will the new data centers come? And Texas is in full force right now. Texas is welcoming a lot of data centers at the moment. I've read an article saying Texas is the state in the US with the highest growth rates when it comes to data centers. And maybe TPL and Landbridge will welcome data centers. If TPL and Landbridge welcome data centers, this will be another new revenue stream for this company. You will have a new line, data centers or use of the lands or something like this. It will come. If it comes, it will be very beneficial for TPL and for Landbridge, accretive to the margins, etc. And you never say no to a new revenue line, right? A new revenue stream. And a few quarters ago, people hated this new development. They said now you have these seismic risks in Texas, so nobody will want to host data centers over there. Nobody would want to welcome data centers because you have this seismic risk. You have no population, no inhabitants, but you start to see some information, some leaks here and there. People are getting interested in developing data centers in Texas. You have some conversations, you have some press releases. This is starting to get some traction. And in the last quarter, second quarter of 2025, you had a few elements from TPL. The management team were starting the discussions to potentially welcome data centers. Nobody knows if this will come or not. At the same time, you can cross-read what LandBridge is saying. LandBridge is a company. Similarly, they own lands in Texas, and they are in discussions right now with potential data center players, and they just signed an energy deal. They just signed a deal for a potential buyer, a potential data center player. They just had a $8 million option. And yeah, they are in talks with potential clients. And I'm telling you, the moment you have an announcement of a potential data center player, like if they sign something, LandBridge stock will go up to $100. Let's see if this is a good bet for me. But the moment you have this announcement of a data center project on LandBridge's lands, the stock will go up immensely. And I mean, let me talk a little bit about LandBridge. The sentiment for LandBridge is very weak. People don't understand this company. They think it's an oil royalty. When the stock is up, people are very bullish and they say data centers are near. And when the stock is down, people hate on the stock. People say data centers will never come to Texas. But you start to see some signs. Okay. TPL just said on data centers and power development. TPL is very well positioned. We have all the attributes needed to be very attractive to power generators and data center developers, hyperscalers. We are pretty close on a couple of opportunities that are very interesting. And I can continue with the exact quote from the management team. Look at this, data center. I think we've probably got more available land with those attributes needed than anyone else in West Texas. I think West Texas is quickly becoming more and more popular as an area to build out multi-giga facilities and campuses. I would just say that we continue to have really good conversations. I think we are pretty close on a couple of opportunities that are very interesting. Hopefully, we will have additional news to share here in the very near future. This is the most bullish sentence I've read from TPL's management team in a while. Because you have a lot of doubts. Will the data centers come? When? How? How can you generate electricity, natural gas? You need a few things that work at the same time, right? You need water, you need land, you need population, you need energy, and you need a hyperscaler that is willing to come here. You need not one thing, you need 4 or 5 things happening at the same time to have this perfect combination, this perfect environment to welcome data centers. Apparently, TPL is seeing some traction, and I believe only this paragraph is the reason why TPL is up 10% today. Only this paragraph is the reason why LandBridge is up 8% today. This is the most bullish paragraph I've read when it comes to this data center story. I'm not saying data centers are 100% certain, right? But I'm saying the probabilities are increasing. If it turns out data centers never come, this is fine, because TPL is a profitable business. Despite a weak environment, TPL is printing cash, so TPL is still a good company. Same thing for LandBridge. It's about water after all, and they're still printing cash. And now, what if there is a 20% odds, 20% probabilities that data centers are coming. If this is the case, you are in front of one of the best risk-reward opportunities in this market, because people will find out power is the bottleneck to AI. So if you think electricity and power is the bottleneck to AI, if you think water is the bottleneck to AI, how do you invest? Either you invest in electricity companies, Constellation Energy or Vistra or Talen, or you can invest in WaterBridge, so a water management company. You had another company called Aris that just got acquired. Or you can invest in LandBridge and TPL that are perfectly good businesses, and you have an option. If you welcome data centers, you have a free call option to have a quick double for LandBridge. And I know I will be here when it happens because I'm a shareholder of LandBridge, right? So I know LandBridge and TPL got a lot of hate because the stock is going down. Just so you know, guys, the stock went down from a very high valuation level. So it's normal. Valuations don't go to the sky. It's okay. You come back to reality. If you look at the valuation for TPL, we were at a very, very high level. The forward P ratio when I sold was at 70. Now it's back to 40. It can continue to go down in the future. But the valuation is still not cheap at all. What if data centers are coming? This is extremely bullish. Extremely, extremely bullish. I mean, this is the investment case behind LandBridge, right? LandBridge wants to have powered lands. This is how they call this. So LandBridge has some lands. You operate some water, some solar panels, some energy players, and potentially they can host 6 data centers. If they can have this beautiful flywheel, LandBridge is maybe the best AI investment you can have for the next decade. Maybe, maybe not. You don't have a certainty here, but I'm willing to invest in LandBridge in case it happens. Because if they are right, LandBridge is a 10x from there. That's one of the few companies I have in my portfolio with this risk-reward profile. If they succeed, LandBridge is a 10x. I'm quite confident in what I say. If they fail, it's okay. It's only 5% of my portfolio. It can go to 0 and it's fine. But if they work this out, it's a 10x in a couple of years. Not now, but for the long term, right? Okay. The takeaway from this report, third quarter of 2025. TPL isn't just a royalty and water play anymore. It's positioning as a Permian infrastructure platform for the AI in energy transition era. Now they're clearly telling us that data centers are coming. They are having nice conversations to come. Despite a weak environment, TPL is thriving. What if we have a good environment in the next 2 years, in the next 3 years? TPL will thrive even more. TPL is the best inflation hedge you can have in this environment. Management hints about data center and power projects that could unlock a new growth leg with secular demand tailwinds. With 85% margins, record free cash flow, almost no debt, TPL has the balance sheet and land base to capitalize on the next wave. The valuation is a forward price to free cash flow of 40. That's too expensive for me, but the story is getting better. As I told you here, forward PE ratio of 40. So if it drops to a forward PE ratio of 30, I'm a happy buyer. You don't need a lot of things to drop more. But if it drops 10%, 20%, I will be a buyer of TPL. You never know, the stock is very volatile, so anything can happen right now. Now, what is the next step? The next step are the earnings from LandBridge on November 12th. Well, we will see if they confirm this data center story. LandBridge just announced a deal with an energy deal, a solar panel deal, and they just announced an acquisition of more lands. At the same time, if you want some information, the last time they announced an acquisition, LandBridge increased their guidance. Now they just announced an acquisition. They didn't increase the guidance. Maybe they will miss on revenue guidance, on estimates. My bet would be they miss on guidance and revenue and earnings. This is the reason why they don't increase the guidance. Well, I never know, right? But I would say you have more chances of them missing estimates for this quarter. So it's on next week, right? Next week, maybe next Wednesday, I don't know when exactly. I will cover this on my channel, don't worry guys. But the next step of this story, that's on November 12th. For Landbridge, I will make a video about this and you will have clear updates on this data center story. But you see some early signs now. You see some potential green flags for Landbridge and for TPL. And this was a very good report for this company. So looking forward to the next one and I'll see you tomorrow. Bye-bye. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.